Although the NSSF Managing Director, Mr. Richard Byarugaba, couldn't explicitly state the interest rates that the fund savers will be entitled to this time round, all indications point to either a return of more than 8% or at the very least, members will walk away with a double-digit return, most likely in the range of 10%.
The last time I checked, my name is Richard Byarugaba, and my official title is Managing Director of NSSF. The last time I checked the NSSF Act, it said that the minister responsible for the NSSF will declare interest by the 1st of October every year. So I think you sort of get the drift. I am not paid enough to sort of make this announcement, but all I can say is that we've been giving value to our members. I've told you what the 10-year inflation was, all right? You remember the slide? It's about 5.4%. 5.4%, add 2 percentage points, that is 7.4%. Let's round it off to 8%. We will compete around the good return that we've given to our members because of that benchmark.
Importantly, perhaps, even with the COVID-19 induced challenges, the fund seems to have stood tall in the face of adversity to deliver the anticipated return of at least a double digit. Even in the case where incomes from treasury bonds were lower, the long-term nature of earnings always gets some money into the fund, whatever is happening currently.
You notice that because the stock exchange did very well, our dividend income also went up quite significantly. And finally, our real estate income went up significantly. You can see last financial year, we only earned about 11.1 billion shillings in the real estate, and this went up to 23.5 billion shillings. And that was driven largely by sales of our properties. So the properties that we had been building, we began to sell, and the profit we made on those went into our real estate income. So quite a good performance, distributed through interest income, distributed through a dividend. Some of our big companies that did not pay dividend the previous year, things like the banks in Uganda, Stanbic Bank, Baroda, Bank of Baroda, DFCU, who had not declared interest the previous year, did declare dividends this year, and therefore were able to take advantage of that.
In the final analysis, with almost 40% of contributing companies and institutions asking to delay contribution, the fund expanded by 17% by assets, and it can safely be said that it is a $4.4 billion size fund today. And whatever the return on investment that the savers will be awarded next week, it is obvious that the fund's resilience has been put to test. And from the performance so far, it looks like NSSF is not in a worse off shape as earlier feared. Ismail Musa, Ladu, NTV,